What's the best investments to invest into right now? What's going to give you security? What's going to give you the best returns? 2022 stock got crushed, particularly the tech sector. And of course, there are certain areas right now where you've got increased volatility. So let me explain. Number one, it's always better to talk to a financial advisor. If you want to go your own way, then you need to take into consideration these factors. First of all, what are your goals? What's your time horizon? What are you really looking for? What is your attitude towards risk? And then you can consider various types of investments. First of all, stock. Okay, if you're looking at stock over any 5-year period since the war, then that would have given you the highest return. Right now, stock, because of 2022, are at a lower price than they have been historically. So over the next 5 years, then the odds are that you're gonna gain a higher return in stock than in any other type of investments. However, of course, if you just invest into one share, and I can give you some ideas, then that's great, except you're crossing your fingers because things happen in life. The reality is no one has a crystal ball. You can't just invest into one company. You need to diversify. And we would always say diversify across not only stock, but other asset classes. So what other asset classes can a person invest into or within a fund that has multi-assets? Well, you can invest into government bonds. They're less risky. And of course, it depends on what's happening with inflation, what happens to government bonds, but you know you're going to get a set return. Of course, you could put your money in a bank account. Inflation is high, and although it's coming down, it's likely to stay high. So again, if you look to the future and you look historically, the odds are if you put your money in a bank account, you're going to lose money in real terms. What does that mean? It means in spending terms, you'll have less. So most people, when they're looking at their money, they want to gain a good return. That means they need to be investing in stock. They can be looking at government bonds, and of course, they can be looking at other asset classes like property and commodities. Right now, property is more likely to be volatile. Why? Interest rates have gone up. Stock tend to go down before property. So you've seen the stock market fall last year. You're likely to see a further fall in property, although that will bottom out, in my opinion, over the first quarter. So if we're looking at investing, I'm actually going to say to you the first quarter is the best time to review your money and actually to be making investments. Why? Stock's lower, property's likely to fall a little bit more in particular countries, and that means that there's going to be opportunities to buy. Of course, if you're looking to invest yourself personally, again, I would say drip into the market. If you've got 100,000, for example, you'd put in 20,000 on a regular basis. In other words, you'd actually go into the market rather than one go, rather than pick the bottom, you'd actually drip into it. A product can be designed to be able to do that for a person rather than just go into one. You say, I've only got 1,000. Okay, that's fine. Again, you need to be talking to somebody. I would suggest then you need to be going into a good, well-managed fund, which again, we can advise you on at deVere, or you can choose those funds yourself if you wish to do so, or an ETF. Advantage of a fund is they can predict the right sectors, they can diversify. Advantage of an ETF is rather than just going into one stock, it's a basket of stock. So you can actually get a lower cost. But then for me, you go ETF, let's say 0.2% per annum, fund, let's say 1% per annum. I'd rather pay the extra 0.75 to be in the right sectors. Again, it's a personal opinion. An advisor can sit down with you and actually talk to you. Right now, I think quarter one, for me, it's the right time to be investing money. And obviously there is some negativity in the world. But again, historically, when you're looking at markets, it's actually better to invest whilst people are talking negatively because prices are down and that gives you the opportunity. And always remember, if you're an investor, you need to be thinking about 2-3 years if you're going to be investing wisely. If you're looking at particular stock, then growth stock got hit in 2022. And I see particular areas in the growth sector which are actually going to do well. For example, the Tesla price has come down a lot. I actually think there's an opportunity. Look at Amazon. I actually think it's a very good company. Again, I think it's an opportunity. Meli is another company in Latin America, which is similar to Amazon, except it does payments. Again, I think it's an opportunity. So there's a number of stocks that have come down that I actually think have got some really good upside. But again, I would always talk to a financial advisor and always diversify to get the right returns. So when's the best time to go in the market? Do you know, nobody can time the market. So I've been in the business a long time, okay, and I can make money in the markets, but timing it is difficult for anybody. Okay, the truth is, and we always say in the financial industry, it's time in the market rather than trying to time the market. If the information is useful, please share the video, please like, and obviously subscribe to my YouTube channel.